Yo, YouTube, what's up? It's your boy Dion. Um, I woke up early today because I wanted to record a couple videos, or I woke up just because I just wanted to talk to the camera. Um, I've been trading for, I don't know, I say off and on for maybe 4 years now. Trading, live capital, trading my live account, and then I've been all of last year was like the first time I experienced with prop firm trading, and I wanted to take a little bit of time, really, just to talk a little bit about like a few things that I wish that I knew at the beginning of my trading journey that I know now. Again, this isn't saying that like I have achieved, I think that's the obvious, but just as a caveat, this isn't saying that like I've got everything figured out, with trading, like far from it. But these are just a few things that I wish that I knew when I first started out. Um, yeah, so I'll jump right into it. Like the first thing I want to talk about is using stop losses, um, particularly um, trailing stop losses. If you don't know what stop losses are, basically what it is, it's an order that you put into the market that says this is, it's kind of like drawing a line in the sand. This is where I want to get out of this trade, because I believe that whatever I thought that it was going to do is not going to happen. So let's say you buy something at $1, um, and you think, all right, if this goes to 85 cents, I'm done with this trade. I want out. And what a stop order does is basically you put it in for whatever amount of shares that you own. If it hits 85 cents, then sell my position. Um, I have been trading for years before I even knew what stop losses and stop orders were. And every time I would go into the market, like if you're trading from your phone, or if you're trading from like your computer, when you go to execute an order, it has like a drop down of like different orders that you can check, like limit order, market order, and a lot of different buy and sell options. Well, I mean, I know what buy and sell is, so like that's all I needed. But if you look, there's a lot of different sell orders, and one of the sell orders is stop loss. Um, and the one that I really that helped me out a lot was the trailing stop loss. So the thing with the trailing stop loss is, a stop loss basically, it has a stop, like a stagnant, or one that doesn't move. Like, all right, 85 cents, that's when the stop loss order is triggered. So it doesn't always exit you at that position, but that's when the order goes to the market, and typically you're sold off like at that point, or in and around that point, depending on how fast the actual stock is moving at the time. What I will do is I will link a video, one of the videos that I watched a year or two ago. I don't know how long it was. I don't know how long ago it was, but it was a video that I watched that kind of demonstrated exactly what I'm talking about.
Third,
So
using a trailing stop loss order is a little bit more automated, and a lot of people choose to use this because we can't all be watching the market every second of the day. So first, what is a trailing stop? It's a point below the current price where you are willing to sell, but it will go up as the stock price goes up, and it will stay the same if the stock price starts going down. So let's look at this visually. In this graphic, we're first going to look at a regular stop loss order. We're using this pink line to show our stop price. This is where we are willing to sell. Now, from the basic order types video, we know that this is what a regular stop loss order looks like. If the price ever drops down to this point, our shares will be sold. You can manually reset where this line is, but unless you change it, it just stays in one spot. What makes a trailing stop different is that this stop line automatically stays a certain distance from the current price. When the share price goes up, the stop line follows it up. When the share price goes down, the stop line does not go down. It stays in the same place. So you might be wondering, how close to the price does it follow and how does it decide that? Well, actually, you're the one that's deciding that.
So it basically trails your position. So as your stock goes up, the trailing stop moves with your position. So how it helped me when I started using that is it helped me to avoid giving back profits. Earlier on in my trading, I had a position where like I think I was up 18,000 bucks in one day off of it was a swing trade. It was a position that it was a position that I had been really waiting for some news, and once the news hit, the stock it just shot up, and everybody was running to get in the trade, and so it had a lot of momentum, and um, and so I was excited. I had that feeling of euphoria. I felt that it was going to keep going to the moon. I was trying to hold to 50,000 because that's what I heard, that this stock was going to continue to keep going up. And I didn't have any stop losses in. I didn't have any trailing stops in. And so, long story short, I'll just cut to the chase. What happened is I ended up exiting that trade a couple days later, and I think I ended up losing maybe like 3 or 4 thousand on the trade after being up like 18,000. So that was more than a $20,000 change of position, up 18 to down like 3 grand or so. And had I been using a trailing stop, I could have had like let's say a $500 trailing stop. So I could have rode it all the way up to 15, 16, 17, 18,000. And at that 18,000 mark, had it come down to like 17.5, which would have been $500 below. I'm using that as a general example. It wouldn't be over your total gain, but let's just say I had a $500 um, trailing stop. It would have exited that trade at like 17.5, meaning I would have been able to lock those profits and not give back all that money. And if it kept going up, then that's fine. Then my trailing stop would have never been triggered, so I could ride it all the way up, and it caps the downside. But it was super useful to me, especially when I learned about it. I was like, damn, how did I not know about this? So the second thing I would say, one thing that I wish that I knew as a beginning trader would be just the importance of like setting alerts. Um, when you set alerts, basically, it gives you the freedom so you're not tied to the screen. Um, it's one of the things with trading where it's exciting to see, the stock market, because there's always stocks going up and down. There's a lot of volatility for the most part, and it could be a bit of an adrenaline rush. It gives you all kind of special feelings to see the market and see trades go up and down, and you're just like kind of. I remember before getting into it, and then even after, there's just periods where you just get sucked into it, and you always want to watch the screen. You always want to kind of jump in on the action, and as exciting as it is, it can be detrimental to you, like your mental clarity. Um, Always watching the stock market. So, I think as a new trader, it's volatile, or not volatile. It's vital to like utilize alerts. And just as a caveat, I actually don't keep any notifications on my phone. No text alerts, no calls. Well, I get calls, but I think for the last 10, 15 years, I always keep my phone on vibrate. So if I don't have the phone on me, it's across the room, I won't know it's ringing. So that's all my phones. It sounds weird whenever my phone is ringing. And so if you're watching this, that might be a kind of a funny thing, but like I never have my phone on. It's always been on silent. I just don't like it. So I don't have any alerts on my phone. So the only alert that I will put on is like if I'm watching a trade. And so what you can do is you can go into almost every trading platform, every app, and turn on alerts so that you can, It's rather than just like constantly staring at the screen, you can just get pinged, um, and it will let you know exactly when you have like a trade that's like setting up, right? And then it frees your mind so you're not like always tempted to jump into a trade when you see price action, you see stocks that are moving. You know, you're just not tempted to jump in there. I remember watching Tori Trades. She interviewed her Uncle Mike, who basically introduced her into and a lot of her family members on trading in the stock market. And I remember watching one of his interviews, or the interview that she did of him, and it was, I think he said something like, if you are looking at the screen, then you're clicking buttons. So one thing that he does is just like, he's not, if he's not um, in a trade or watching a position, he's not looking at the screen. And for me, when I heard that, I'm like, that makes a lot of sense.
Making trades. I was making my trades for a second. Matter of fact, here's another test, something I tell people. If you're looking at the screen, you're intending to push the button.
Okay. If
If you're not intending to push the button, you should not be looking at the screen.
Okay.
Now, that's scary.
Yeah.
Whoa. That's how I live, by not looking at the screen, because I know how to think now.
Yeah.
Okay? When I go to look at the screen, it's because I'm intending to do something.
Yeah.
You don't sit there and just watch that thing, whatever. Scary, happy, scary, happy.
Yeah.
Okay? Whatever. That's you're in the 90% camp.
Because I can't tell you how many times I tried to use discipline by just looking at the stock market and just sitting on my hands like, all right, I'm not going to take a trade. I'm just watching it. And like, it's just too much temptation, honestly. So um, if I'm not in a position, like watching my position, um, I think more and more like I'm trying to use the alerts. So I did turn on the notifications for my trading platform just to make sure I'm not like blowing money or like screwing myself out of a good trade. Um, but I use alerts just to kind of say, hey, all right, this trade is setting up. It's, and it's a good time to jump in. So I will open the screen. But other than that, if you're a new trader, I would advise against, watching and staring at the stock market the entire day. And that brings me to my third tip, the last tip, which is having a trading plan and staying true to it. Um, I've talked a lot about discipline, and I will continue to make different videos about like the importance of having discipline when it comes to trading. Um, but having a trading plan and sticking to it, that is probably the biggest tip out of all three. Is partly why I saved it for the last. Um, it's so vital to um, just know, have a general idea of what you're doing in the stock market. You don't have to have it all figured out. You won't have it all figured out, but just having a plan. You know what I mean? It's kind of like just getting into a car with no roadmap or no destination. You're just kind of driving. You'll go somewhere, but it won't be where you want to go. Um, if you don't have a roadmap to get there. And so that's kind of a loose. Um, I think that's a really loose example as far as like having a trading plan, but um, having an idea about what you think the stock is going to do, or whatever market that you're trading, whatever this currency, if you're a forex trader, whatever, having a plan as far as what you think it's going to do is important. Whether you're right or wrong, that doesn't matter. I've read in 2024, I read and watched a lot of videos of Mark Douglas. And he's got like a few different books, or a couple books. One of them is The Disciplined Trader, and the other book, I forget his other books, but I watched a lot of his YouTube videos, and he just talks about like, trading is a probability game. And so with trading being a probability game, it's just you really don't know exactly what this particular trade is going to do. And basically what you're doing is you just got a best guess. you're guessing what you think is going to happen based off of probabilities, based off of the patterns, based off of what you're looking at on the market. So you're never going to be 100% correct. Even the best traders are 100% right all the time. So with you being a new trader, you're not going to be 100% correct the whole time, but just having some type of idea of what you think is going to happen and having some rules and a plan as far as like, okay, when it does this thing, I'm going to do this. That is all you need starting off, is what I would say. Having some type of idea and a plan that you're going to stick to. All right. So if this stock goes to $10, I'm going to sell half of my position. If it goes to $12, I'm going to sell the rest of it. That's my plan, and I'm sticking to it. If this stock goes to $9, I'm not going to lose more than $9. That's my plan. It doesn't matter if I think that it's going to turn around and go back up. My plan is if it hits $9, I'm all the way out. Because I can't tell you how many times I've heard other traders, and myself included, um, having not having a plan, and it just end in devastation. It just ends bad. So um, having a plan, you're going to be much better off in the long run. And you're not going to be perfect. You're going to get it wrong a lot of times, but just having a plan in place is going to save you a lot of headache in the long run. And it's a good habit to start off with. I went on a bit of a rant. This wasn't a clean discussion, but I just had to get it off my heart because honestly, there's a lot of new people coming to the trading space, and if I could share a little bit of value as far as some of the mistakes that I made, and if I could help you become a better trader overall, and figure out some things that I didn't know. I think it'll help you in the long run. So I'll try to leave a couple links to some of those videos that I was talking about with Mark Douglas and Tori, and even Tori Trades in that interview that she did with her uncle, and then also I'll try to link that video that kind of breaks down the different trailing stops so that you can get a visual of how trailing stops work. Because again, those things were like eye openers for me. They were such a big epiphany in my trading, and so the trailing stops, you have to use them, or stops in general. You have to use them because, you know, we all as traders, or, degenerative gamblers, you know what I mean? Like you always are thinking about the upside, and you might not always be thinking about the downside of a position. Like, okay, I'm gonna do this when I make all this money, but you're not thinking about the possibility of this trade going against you. And so having a stop is that kind of like line in the sand. It protects you from that negative self, you know what I mean? That negative side that you're not really thinking about. So, you in trading, you want to have as many good systems in place so that you're just protected, because it's a, like I was just saying, it's a probability game, and you want to be able to not just make money today. You want to be able to trade um, years down the road, and not be one of those traders that get into the game and just get burnt out after a couple weeks or a couple months. You want to be able to sustain yourself, because it's one of those things that, like, it's one of those, and to me it's a valuable skill, one that when I really, took it serious, I'm like, yo, I'm never giving this up, because it's so much, it's so much opportunity with the markets, you know, um, it's just so much opportunity. So this is a skill that you definitely want to master, and being able to stick around the game as long as possible. Um, to me, that's the name of the game. I just want to win, win over the long haul. So that's it. I appreciate you watching. Make sure you subscribe and comment if any of these things were new to you. If you already know this, maybe you can comment something that you've been doing that works for you. Or if I forgot any tips, you can comment them down below. But I appreciate it, man. Best of luck with your trading. I know I can use it, and hope you have a great day. Holla. Peace.